I mean, I want to say this is my fundamental view. The dollar is a doomed currency. Doomed. Now, in what way it will go down? I live in Thailand. Will the dollar drop a lot against the Thai baht? I'm not sure. I doubt. But will it drop a lot against, say, precious metals and possibly, things like Bitcoin? I'm not a Bitcoin prophet or, say, person recommending it as an asset. I prefer physical precious metals, platinum, gold, silver, and some other commodities. Other commodities are much more attractive than gold. But for the ordinary citizen, I think what is relatively safe is a gold asset. Mm-hmm. Now, will BRIC introduce new currencies? Will the dollar be the reserve currency of the world in 100 years? Zero chance. Zero chance.
It's my pleasure to welcome back to the channel a gentleman that we've had on a good number of times. He is an author, investor, and publisher of the Gloom, Boom, and Doom report. It is Dr. Marc Faber. Marc, welcome back to the channel.
Thank you very much for having me.
You're very welcome.
Good day to all your viewers and listeners.
Thank you. It's always great to have you on. I really enjoy your insights and your particular take on markets, geopolitics, developments. If we think back, it's a good number of months since we last talked to you, and a lot has happened there, both from a geopolitical perspective, but also in financial markets. We've seen the Federal Reserve cut by 50 basis points. This is an interest rate cut that comes when we see stock markets at or near all-time highs. We're seeing gold prices at or near all-time highs. Is everybody missing something? Is the Fed panicking? Do they know that something is coming down the track and that's why they're trying to act and act quickly?
We don't know, because the Fed or its members, to be precise, are more inclined to get Mr. Biden or now Ms. Kamala Harris elected rather than Trump. So it may be a motivation to keep stock markets and the property market in the US at a high level. That may be one reason. The other reason may be a view that the dollar is too strong and that they want to lower interest rates to realign the dollar at a lower level against foreign currencies. Mm. And a more important reason, in my view, is that the economic statistics that the Biden administration has been publishing for the last few years are one big lie. They are heavily doctored, massaged, and understated the cost of living price increases and overstated economic activity, because they measure GDP, but they adjust the GDP then for inflation. And if inflation is much lower as a result of the statistics that have been doctored, then the GDP growth looks much more favorable. Mm. The fact is simply that in the US, close to 70% of the people live paycheck to paycheck. Is not exactly a sign of strong economic vibrancy. And the fact is that the government has been having these huge fiscal deficits. So through the deficits, temporary economic activity looks better. You just hand out money to people so they can go shopping. So the retail sales are relatively strong, when the reality is that this money has been borrowed and hasn't been repaid yet. And yet now the interest rates are going up. So the government has a problem with rising interest rates. You understand?
Yes.
Every government throughout history has always produced inflation because that's a way to pay their debts. And and essentially tax people without telling them that the taxes have gone up. Inflation is a tax, nothing else.
So, I mean, what you're saying there is really interesting. It's something we've been talking a bit about on this channel, which is real GDP, right? And what you're saying is that when you've got GDP, nominal GDP, 5-6%, and you're saying that inflation is under control, and inflation is 3%, and then you've got real GDP that's, kind of 2-3%. But the reality is that the figures that are being produced, the inflation figures that are being produced, are being underreported. And we're seeing inflation figures. Kind of the lived experience of inflation for people in the States is significantly higher. And it could be, if we take the shadow stats approach to calculating inflation the way it was calculated back in the 80s, you're looking at numbers that are north of 10%. And if we then look at that, we're saying that real GDP is actually negative and has been negative for a long time.
Correct. I also pay attention to John Williams' shadow statistics. And someone may argue, well, John, he overstates inflation by some measures. To this, I can say, yes, maybe some people don't have the inflation rate that he is publishing. But his take on inflation is much closer to the reality than the fantasies that the Bureau of Labor Statistics are publishing.
So if that's the case, they actually understand, the Fed and the government understands that the state of the economy is an awful lot worse than what they're actually publishing, and that the narrative is suggesting. And then potentially there's a number of reasons, whether it's political, whether it is to do with the strength of the dollar, or whether it's to do with the strength of the economy, that they want to start cutting interest rates now. Which of those three things that you talked about there do you think is the most likely one?
I think that if you look at the world 50, 70 years ago and you compare it today, the world today is a very different world, obviously, because you have so many countries that have opened up and so forth, and prices are much higher today than they were then, and the debt level is much higher than it was at that time and so forth. So a lot of things have changed. But one thing that is striking, when I started to work on Wall Street in 1970, that was my first job at a firm called White Weld and then at Drexel Burnham. The market capitalization of the US was about 25% of GDP. At the present time, the market cap of the US is about 150% of GDP. In other words, the economy has been growing, maybe not as much as the statistics suggest, but it's been growing. But the financial market has exploded. Now, if we add to the stock market capitalization, the market capitalization of the bond market and of the derivatives market and whatnot, you have a huge financial bubble in the world, and a lot of spending and a lot of industries depend on this inflated asset market. You understand?
Yes.
If we had in the US the unusual occurrence, which nobody predicted, commercial properties in some cities are down 70%, 80% from the highs. Never happened before. It's unbelievable. But if the real estate market, the residential market went down, say, 30, 40%, it would have a huge impact on spending. If the stock market dropped 30%, I can tell you, consumer sentiment is already depressed at the present time. You know how much consumer sentiment would go down if people lose 30, 40% of their money in the stock market?
How much?
So the Fed is interested to keep the asset inflation high. They're afraid that the asset inflation deflates. That is the main worry, in my opinion.
Okay, so they're chasing this, and there's only one way out of it, which is to cut rates and print money.
I'd say in the long run, additional money printing is inevitable. The pain of not printing more money would be disastrous. The pain of money printing will also be disastrous, and it's been outlined in books like The Economics of Inflation, but it's not disastrous immediately. You see, that the work that people need to read, The Economics of Inflation by Bresciano Turoni, that describes the impact of monetary inflation on everything, on society, on the poor people, on the rich people, on industrial concentration, and. And it's very important to understand that in monetary inflation, some people benefit, including Marc Faber. But as a historian, as a social observer, and as an economist, I must say the most disastrous policy government can implement is monetary inflation. It will destroy the lower classes and the middle class. Destroy.
Has the horse bolted on this, though, in the sense is what could they possibly do at this stage? Has it just gone too far at this stage? What could they do to reel that back?
You ask a very important question because it relates. Is a democracy capable to have sacrifices, to sacrifice themselves? Because as a politician, if I go to the people and say, look, here is the reality, the deficit, the liabilities we have, the interest rates that we have to pay on the debt, and there are two ways to do it. We can increase taxation on you, or we can cut your benefits, your veterans, your social security recipients. We all cut your benefit by 30%. Do you think Marc Faber as a politician will be elected? No, he will not get a single vote. People want to live in the illusion of wealth. So let's print money. Money printing is a policy that initially people like. Everything that people like, benefits, subsidies, and so forth, children allowances, old age insurance, everybody likes this. The consequences of inflation, nobody likes that prices go up at the supermarket.
It's like a sugar addiction, basically, isn't it?
Yeah, I don't know. I've never been sugar addicted. I'm alcohol addicted. I need the beer.
Have your beer. You raise an interesting point there, just in relation to, you talked about the size of the debt and the interest rate payments on the debt. And it's something that we've been talking about in GoldCore recently and on the channel as well, which is the US net interest expense. And there was a great video recently by Luke Groman on this. And what he was saying was that the US net interest expense, which is not just the interest payable on the national debt, but as all those other aspects that you talk about, which is the Social Security, Medicare, Medicaid, veterans benefits, all of those things, that they now, on average over the year, represent 95% of the receipts for the government, the tax receipts. And I'm not too sure whether it was in August or whether it was in June or July of this year, but it was 150% of receipts. So therefore, they're taking in that month, they were spending 150% of what they were on the net interest expense, 150% of what they were taking in. That's totally unsustainable. And the only way, as you suggest, there's a couple of ways that you can do that, is you can cut benefits in order to reduce that down, or you can increase taxes. Now, if you try to be fiscally disciplined in any way and cut spending on your discretionary spending outside of that, well, then you run into another problem, and that problem is that you potentially trigger a recession, in which case your tax receipts go down even further. So you're caught between a rock and a hard place here. What do you think about that?
Well, I would have to double check the figures. I don't think the government interest payments on the federal debt, I'm talking about federal debt, not local debt.
Sure.
The federal debt is at the present over $1 trillion, okay?
Indeed.
The government takes in tax revenues, I suppose, about $2.5 trillion.
Mm.
Something like this, $2 trillion. So it can pay the interest. There's no problem at the present time. The problem is, as you say, that to rectify this problem, tax increases will lead to a slower economy, most likely, not sure, but most likely, and benefit cuts would cut consumption dramatically. But inflation will cut it as well, because the inflation that you produce through the deficits and the money printing lead to higher price increases than wage increases. So your spending power goes down. But you can obstruct this with statistics. But the reality is most households in real terms are worse off than, say, 5 years ago. Also in Europe, it's not only in the US, in Europe the same.
So what's the solution in that instance?
I'm telling you the solution on the government level. I'm not so sure, but on the individual level, you can, it's a currency debasement that we're in. A monetary inflation is a debasement of the currency. So you have to own assets that you cannot debase. One of them would be precious metals.
And with that,
and the second, what you can do is once you can restrict democracy, you have to have a democracy that is essentially based on a small number of people and not that everyone can vote.
Okay.
If everybody can vote, you have a mob rule.
Right. Okay.
That is the mob rule that Aristotle and Plato and all these characters discussed already 3,000 years ago. But of course, the modern socialists, they don't like that. They like that mob rule prevails because then they can put up the most incompetent politicians to get elected.
And that's what you feel we have now?
Yes.
All around the world?
I'd say in democracies, the quality of governments has never been this bad.
Okay.
Give me one country that has a good government. Give me one. In the democracies.
I'd have to
maybe
think
Italy
long
at
and
the
hard
present
about that.
time. Maybe not. Who knows?
Yeah. I just want to switch tack
maybe
for
Milei in Argentina.
Yeah, I want to just switch tack for a moment now and just talk about this is October 2024. In a couple of weeks' time, we're going to see the BRICS conferences in Russia.
Yes.
What do you think is going to come out of that conference? There has a lot of talk about a gold-backed currency, BRICS currency. Do you think that we're close to that? I know we're probably closer than we've ever been before, but I mean, is this something that's imminent, or do you think this is still something that is potentially far off, or is this still just pie in the sky?
It may happen, but I don't think the impact would be terrific because I own physical gold. So it's like if I own the gold-backed currency, I rather have the physical than the currency personally. So you understand? The gold price has already adjusted largely to the upside because countries, thanks to the quality of politicians that we have in the US, they no longer trust to own assets in the US because they know the US government can take it away, freeze it. And the US government has the talent to even freeze money of impoverished countries like Afghanistan, where people are actually starving.
So you don't
it's
think...
actually a very sad tale, very sad tale.
Indeed. So just just sticking with the BRICS currency for a second, you don't think that's going to have a huge impact? Do you think that it's going to have a huge any impact on the dollar itself if we're going to if we're going to see the launch of a currency that's 40% backed by gold? Or do you think
Look,
that that adjustment has happened already?
I mean, I want to say this is my fundamental view. The dollar is a doomed currency, doomed. Now, in what way it will go down? I live in Thailand. Will the dollar drop a lot against the Thai baht? I'm not sure. I doubt. But will it drop a lot against, say, precious metals and possibly, things like Bitcoin? I'm not a Bitcoin prophet or, say, person recommending it as an asset. I prefer physical precious metals, platinum, gold, silver, and some other commodities. Other commodities are much more attractive than gold. But for the ordinary citizen, I think what is relatively safe is a gold asset.
Mm-hmm.
Now, will BRIC introduce new currencies? Will the dollar be the reserve currency of the world in 100 years? Zero chance. Zero chance. Will BRICS have a replacement currency? Who knows? Because in BRICS, you have very different political views and tendencies. I mean, how do you get India and China to talk together? It's an achievement. A big achievement.
You talked there about in the quality of politicians. There is a big decisions that's going to be made in just over a month's time in the US, which is the president for the next 4 years. Of the two candidates, which do you think will serve the country best or do the least damage?
Yes, this is a very good question. Which one will do the least damage? I have to say, based on the team Trump has with Mr. Vance as a VP, I think Vance is a very intelligent and he's a doer. He's a man who can do things and move things. And I think he would be much, much better than the word salad speaking Miss Harris and their VP, both of whom are actually communist socialists. I mean, we have to see this. That would be an amazing change. And both of them are clueless, especially the presidential candidate. She's a clueless woman. She must have, I admit, some qualities which even nowadays you can see in her facial expressions and so forth. But they are not in the field of any academic or political field. The other qualities that she may have had to move up the ladder in a man's world. That we have to see very clearly.
Now, the reality is that whoever is elected will be taking over at a time where we're seeing an awful lot of political unrest, a large divide in the states between left and right. There's a lot of people that are looking at the US at the moment and what's been going on over the last number of years and say that the US is potentially close to a civil war, closer than it has been since the last civil war there. What's your take on that? Is that all just a bit of hyperbole, or do you think that there's any semblance of potential in that?
I would not know. I only know that Generation Z, the woke society, is not very belligerent, to say the least. But we could have secession, that states would simply disregard federal rules.
Mm-hmm.
But they don't like to do it because then they don't get the subsidies from the federal government. So it's a very complex issue. I don't want to venture about this. But one thing I want to say, the two candidates are actually not all that different in terms of fiscal policy. None of them will address the fiscal deficits.
Mm-hmm.
Both of them want to print money. So, you know.
So we're just going to see further growth in the national debt.
In my view, we will see for the next 6 months or so, inflation may come down somewhat and bonds may rally somewhat. But long term, inflation, in my view, will accelerate.
Right. Okay.
And we will see higher interest rates than we had in 1980. 1980 deposit rates at the banks were around 20%.
Mm-hmm.
And the 10 years treasury went and yielded over 15%, 15.84% precisely. So we'll exceed these highs, in my view.
So what we're looking at there is, as you said, it's going to inflation looking like it's getting under control for the next while. We're going to see the Fed continuing to cut because they have to effectively underpin the property market if they can, but the stock market as well. There's going to be continued printing, which is going to ultimately, after that initial 6 months, is going to start to fuel inflation. Inflation is going to rise an awful lot higher. You could see it getting up into double digits and beyond, possibly 15 to 20%. Obviously, that has massive implications for the dollar, as you've already talked about, and you think that the reality is that the dollar is ultimately going to disappear as a reserve currency and potentially just disappear over time. With all of that in mind, and maybe I'll just ask this as the last question, as somebody who is looking at this situation across the world for the first time, what can they do now to start to protect themselves?
Well, this is a very good question because maybe we cannot protect each other entirely. You see, when I grew up in the 1950s and 1960s, my grandparents always said you need to save money and you need to put it in bank deposits and so forth and so on. At that time, bank deposits in Switzerland were relatively safe.
Mm-hmm.
Can I say that my dollar deposits are safe? No, I'm not feeling very comfortable with dollar deposits. They may suffer under the fact that in real terms, interest rates are too low or negative. In other words, inflation is higher than what I get in terms of interest.
Mm-hmm.
Number two, I could protect myself in the stock market. I can see some merit to this view, but most stocks are on the high side. They're not cheap. The third alternative is, of course, to have real estate and precious metals and collectibles like art, stamps, and so forth. There's also some merit to that. But in an inflationary, in an asset deflation, that every inflation, I want to point this out, every inflation is followed by deflation. Mm-hmm. In the stock market inflation, when stocks go up, a bear market follows. Inevitable. Nothing goes up forever. Anyway, you could own precious metals. Some people say they are expensive. I don't think so. And I think they're relatively safe. But it is a fact that the government could come and say, you are not allowed to own gold, or if you sell your gold, you must declare it, and you have to pay tax on it, and. Do you understand? The government can make ownership of things very difficult and painful for you.
Yes.
They can also, your house, they can come and expropriate you. Now, most likely they won't do it, but they can do one thing. They can increase taxation on your house to a level where you can't afford to be in your house and you have to sell it. Mm. The governments, unlike what they teach you at primary school, that they look after the interest of the people, the government is the most evil institution that was ever created. The bureaucrats, they have no respect for individuals and their fundamental human rights, zero respect. We've seen it in the UK, we've seen it in America. They lock you up and they go and party themselves. That is the picture people should keep in their minds. They lock up ordinary people who are working people, they close their businesses down, and themselves they go and party with champagne from France.
This is true.
That is the government.
So, don't trust the government. Put your trust in physical, tangible assets, gold, silver, property, collectibles.
Small houses.
Small
houses in the countryside. But don't drive your Rolls Royce to small villages in the countryside or arrive by helicopter. You want to integrate and pretend to be a local, and you don't want to show your wealth.
Dr. Marc Faber, thank you very much for joining us on the channel. I look forward to having you back on.
Well, thank you. Bye-bye. And good day to all your viewers and listeners.